Hey, welcome back everyone. This is Uncle Frank, and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay, traders, let's prepare for next week and beyond, starting with a look back from Wall Street breakfast. Wall Street on Friday posted a 5-week win streak for the first time since May. The benchmark S&P crossed and ended above the 5,800 points level in a historic first, while the blue chip Dow is fast approaching the 43,000 points milestone. Despite Middle East escalation concerns, a hotter than expected consumer inflation report, and a recalibration of Fed Reserve interest rate cut expectations, markets have continued to march higher. Some of it can be chalked up to favorable reactions to quarterly results from big banks, but the story this past week has largely been traders' resilience to negative developments. That's a fancy way of saying we traders are ignoring the bad news. Inflation grabbed all the attention on Thursday and Friday. On the former day, the CPI for September came in hotter than anticipated on a month-over-month basis for both the headline and core figures. On the latter, PPI figures came in cooler than expected. For the week, the S&P added 1.1%. The Nasdaq also gained 1.1%, and the blue chip Dow rose 1.2%. On Friday, we were green across the board except for oil. The Russell put in the best gain of 2.1%. Crude oil lost 36 cents but remains over 75 at 75.49. And would you look at gold? Tacked on 34.90 or 1.32% to finish Friday at 2674.20. As of September 26 this year, the record high for the price of gold was $2,685.15 per troy ounce. Tesla shed 13% and was among the top S&P 500 losers, while the top gainers included Uber up 16%, Supermicro up 16%, and the Norwegian Cruise Line Holdings up 15%. Hey, didn't that slob Adam Aarons sit on that board of Norwegian? He sure did. He left in 2023, around the same time he was caught sending nude images of himself involved in a sex act to strangers on his cell phone. This was around the same time he invested our money in a formerly bankrupt gold mine. That money was used to rescue 5 lien holders of Hycroft that were all short AMC or long puts against her. At Norwegian, Adam helped guide private equity giant Apollo Global Management make key investments in the cruise business. He was a senior operating partner at Apollo for 9 years, just before joining AMC to wipe out its entire market cap. Okay, that was last week. What about this weekend? From Bloomberg, inflation is dying but not dead. Olu Sonola, head of U.S. economic research at Fitch Ratings, declared that after new numbers showed, at least by one measure, inflation sticking around. That, coupled with last week's blowout U.S. jobs report, complicates the debate over the Fed Reserve's next move. Does it opt for a small interest rate cut or pause after a large September reduction? The latest jobs report also renewed chatter in bond market circles about the no landing scenario, a situation in which the U.S. economy keeps growing, inflation reignites, and the Fed has little room to cut rates. Then there's the safe haven, gold, which has surged to new heights and weirdly caught the attention of Costco shoppers. I always enjoy the segment Key Stories You May Have Missed from Yahoo Finance's Morning Brief. Tesla's Cybercab robotaxi is finally here with a $30,000 price tag plus a surprise robo-van. But Tesla stock sinks as toothless robotaxi disappoints. I heard this kid on YouTube say you'll be able to buy one of these robotaxis and put it to work for you after it drops you off at work. Well, don't worry, guys. Flying taxis will not disappoint, in my opinion. Not investment advice or advisor. Warren Buffett's Berkshire Hathaway trims Bank of America stake below 10%. Now he doesn't have to disclose anymore. U.S. consumer sentiment slipped in October. J.P. Morgan touts soft landing possibility after better than feared earnings. And Social Security benefits will increase 2.5% in 2025. Now that's good news for your older friends because inflation has averaged 3 times higher under Joe Biden. Every year of the Biden administration, the inflation rate has been higher than any year under President Trump. So now what's next? There is no Fed meeting scheduled for October, so we may have to wait until November for the next rate decision. And if we keep getting hot inflation readings or crazy labor numbers, we may not get another rate cut in November. Monday, October 14th, is the Columbus Day holiday. The U.S. bond market will be closed, but the stock market will be open for business, baby. October 15th and 16th is Ripple's Swell Conference in Miami. So that's Tuesday and Wednesday. October 22nd to the 24th is the BRICS Summit in Russia. Thursday, October 24th, 8:30 a.m. Eastern, initial jobless claims. Then at 9:45 a.m., S&P Flash U.S. Services and Manufacturing PMI. Now, did you notice the Ripple Conference is exactly 1 week before the BRICS Conference? They could release some important information ahead of BRICS. By the way, we could get some earth-shattering and market-roiling headlines out of the BRICS Conference as well, and right before the election. This could profoundly affect crypto, precious metals, the U.S. bond and stock markets, not to mention the dollar. Thursday, October 17th, initial jobless claims again and U.S. retail sales. I expect Bill Wang of Archegos to be sentenced on Monday, October 28th. I just want you to know it took bringing down a 160-year-old Swiss bank before this government and its regulators finally went after this hedge fund. Remember that. Speaking of Bill Wang, the story ain't over yet, guys. Archegos banks that unwound bets face criminal antitrust probe. DOJ prosecutors ramping up scrutiny after Bill Wang trial. They're examining whether banks colluded while unwinding bets. Yeah, they'll probably give Bill a reduced sentence if he doesn't rat on the Wall Street bad actors. We don't need any messy headlines this close to the election, do we? Guys, if all that wasn't enough for you, next week's earnings schedule should keep you dancing. I'm just going to call out the ones I'm interested in. Tuesday before the bell, United Health, Johnson & Johnson, Bank of America, Goldman Sachs, Citi, Charles Schwab, PNC and Walgreens. Then after the bell, Interactive Brokers. On Wednesday, I'll be watching Morgan Stanley before the bell. On Thursday, Blackstone. After the close on Thursday, Netflix. And then on Friday, I'll be watching American Express, Fifth Third, and Ally. Before we get to the good stuff, there are some important facts you need to know from this article titled Chart of the Week. The bull market turns 2 years old. Here's what Wall Street thinks comes next. The bull market in the S&P 500 began 2 years ago and is showing few signs of slowing. Backed by the rise of artificial intelligence euphoria and a surprisingly resilient U.S. economy, the S&P 500 has gained more than 60% in the past 2 years and is hovering near an all-time high. My comment? Citadel's multi-strategy Wellington Fund gained only 15.3% in 2023, and as of October is up only 10% for the year. So everyone that invests with Citadel would have been far better off buying an index fund. But then Kenny couldn't buy a $100 million painting during the pandemic, pay off countless politicians, develop America's first billion-dollar personal residence, buy a copy of the Constitution, or buy his own $50 million dinosaur. Citadel's Tactical Trading Fund, which focuses on equities and quantitative strategies, gained 0.9% in September, bringing its 2024 return to only 15.6%, still way shy of the S&P. Anyway, Wall Street strategists who spoke with Yahoo Finance believe the bull can keep running wild. Barring any unexpected shocks, the path higher appears to be clear, with earnings growth expected to keep accelerating and the economy on seemingly solid footing as the Fed Reserve cuts interest rates. A bull market for the S&P 500 was officially declared in June of 2023 when the index rose 20% from its recent bear market low. Here's the important part. History says this bull market still has legs. At 2 years old, the bull market is well shy of the average run of 5.5 years, and the total return thus far, about 60%, is a far cry from the average 180% gain per research from Carson Group. In the past few weeks, several Wall Street equity strategists have made the case for the benchmark index to rise further both into year-end and into 2025, supported by accelerated earnings for the S&P 500. Quote, "We continue to be surprised by the strength of market gains and decided yet again that something more than an incremental adjustment was warranted." BMO Capital Markets chief investment strategist wrote in a September note when raising the year-end price target for the S&P to a street high of 6,100 from a previous target of 5,600. Now on October 4th, Goldman boosted its year-end target to 6,000 and initiated a 12-month target of 6,300. Goldman did note that already high valuations could limit the upside for how far the index can reach in 2025. Strategists who spoke with Yahoo Finance agreed the already stretched valuations challenge how much higher stocks can go. Schwab's senior investment strategist Kevin Gordon noted that dating back to the mid-1960s, the only time valuations have been this stretched on a trailing 12-month price-to-earnings ratio were back in 2021 and the dot-com bubble of the late 1990s. Quote, "This would tell you that the bull is much older or somewhat near the end of this life," Gordon said. But strategists often warn that a high valuation itself isn't a proper tool for calling the end of a bull market. Stocks can trade at what are considered to be expensive valuations for longer than expected. What that does tell investors is that much of the good news that could push stocks higher might have already been priced in. Quote, "If you look at what the market's discounting right now, we'd say front and center, a big chunk of what's been priced in is a soft landing sentiment," the Citi equity strategist told Yahoo Finance. I would agree. So, Uncle Frank, where are you on all this? I'm with this guy. Piper Sandler chief investment strategist Michael Kantrowitz noted that high valuations themselves aren't why bull markets end. There needs to be a catalyst. He explained there are two common reasons market drawdowns happen: a spike in interest rates or a rise in the unemployment rate. Well, here's something my subscribers will recognize. It's Uncle Frank's list of catalysts, the potential black and white swan list. There are only 80 days left of 2023, and I say there's a 100% chance of one of these swans landing. Not investment advice or advisor. Under geopolitical, Israel versus Hamas, Hezbollah, and the Houthis. And of course, the upcoming Israeli strike on Iran. Will that include the United States, Russia, and or Turkey? The Russia-Ukraine thing goes on. What about China and Taiwan, North Korea? And now more than ever, the 2024 election itself is looking like a swan event. Under systemic or financial, $1.14 trillion U.S. credit card debt crisis, $4.7 trillion commercial real estate debt crisis, unrealized losses at banks, $517 billion, and the Fed Reserve's $1 trillion in unrealized losses. What about the $35 trillion U.S. debt spiral and the $200 trillion derivative tsunami? Nearly 300 U.S. banks are considered to be at an elevated risk of failure. We've got the de-dollarization trend coming from BRICS. Ryan Cohen could still make a surprise announcement about the future of GME, or maybe we'll get another roaring kitty tweet. The SEC versus Ripple case rambles on. We might see the approval of Ripple's stablecoin, or maybe even XRP ETFs. Elon Musk could debut his new payment platform on X. We could get more rate cuts from the Fed, or maybe they'll be delayed. We've got the hidden hedge fund over leverage, meaning securities sold yet not purchased, potentially billions of unreconciled synthetic shares out there. Now I ask you, be honest, is this list of conditions better or worse than what we experienced in 2008? As I've said, guys, this isn't if but when. U.S. officials say Israel has narrowed down its targets for strike on Iran. The strike could happen at any time, U.S. and Israeli officials told NBC News, and could come during this weekend's Yom Kippur holiday. Guys, something is coming. I don't know when, and I'm starting to think it could all happen at once. From Business Insider just 10 hours ago, America's offices are about to see a wave of distress that could result in 1 billion square feet of fresh housing supply. A seismic event is brewing in a corner of the commercial real estate market, with many office buildings facing distress as they approach a wall of maturing debt and struggle against enduring work-from-home trends. Real estate experts told BI that the office sector will experience a wave of distress in coming years. Rundown vacant offices could be sold in fire sales as owners cut their losses. That might be good news for housing supply as former offices get converted to apartments, industry vets say. You might ask, which bank is the most at risk? New York Community Bancorp is considered the big bank with the highest exposure to commercial real estate toxic debt, with a staggering 57% of its total loans tied to commercial property debt. This high concentration has led to significant concerns about its financial stability. That's the same bank Steve Mnuchin and Ken Griffin recently bought a piece of. And yes, November and December already look like a haunted house for stocks, bonds, oil, precious metals, and crypto. In November, I expect 3Q earnings releases from AMC, Archer, and Joby, and the November 5th election is now only 24 days away. We won't have an October FOMC meeting, but the November meeting is scheduled for the days immediately after the election, the 6th and 7th, and it's already getting amped up. What if Biden resigns in late October and swears in Kamala as president so she can run as an incumbent? I bet Hunter gets pardoned then. He's expected to be sentenced on November 13th. I also believe the immediate future of crypto could swing on this election. Trump has promised to dump Gensler on day one in office, but that's not until January 20th of 2025. That's 100 days away. What is Gensler capable of until he's thrown out in the street, or worse, what will he do if Kamala wins? GameStop's next earnings date is unconfirmed, but expected on December 4th and typically after market hours. The big question is, will Ryan Cohen drop his future plans for the company before or after the election? My guess is after, which would make the fourth quarter GME earnings call, in a word, explosive. By the way, December 17th and 18th will be the last FOMC meeting of the year, and that very same week, Friday the 20th, will be this year's last quadruple witching day. Even that week has the potential to blow a hole in your 401k. So buckle up, buttercups. You wanted to see some action. I say it's finally here. Okay, guys, hashtag AMC from Zach's Friday. AMC Entertainment's robust box office performance fuels growth. AMC is poised for potential growth as the box office begins to recover, operational efficiencies improve, and innovative content takes center stage. The second half of 2024 signals a promising revival for the box office, with June marking a crucial turning point. AMC achieved an all-time monthly adjusted EBITDA record for June, largely fueled by the box office success of Disney's Inside Out 2. The domestic revenues in June surpassed the combined figures from April and May, highlighting a significant upward trend. I would like to point out not one word from investor relations on this. Anyway, with this momentum, AMC is well positioned to capitalize on the brighter outlook for the remainder of 2024, bolstered by highly anticipated releases like Joker 2 and Gladiator 2. The company is also looking ahead to an exciting movie slate for 2025 and 26, featuring blockbuster franchises such as Star Wars, Avengers, and Avatar, which should sustain growth in box office revenues for years to come. In addition to benefiting from a recovering box office, AMC has made strides in operational efficiency. The company has implemented notable cost-cutting measures and introduced innovative revenue streams, such as selling movie-related merchandise. I would also add popcorn. AMC anticipates generating around $50 million in merchandise sales in 2024, which comes with attractive profit margins. This dual focus on innovation and cost efficiency is expected to drive growth in the upcoming periods, which should position AMC favorably in the competitive landscape. AMC's foray into alternative content has proven lucrative, with successful ventures featuring concert films from artists like Taylor Swift and Beyoncé. The company plans to explore more similar projects in the future. Additionally, AMC is expanding its premium large format screens. We're spending money catering to the growing consumer demand for enhanced viewing experiences. The company's loyalty program, AMC Stubs, along with the subscription service AMC Stubs A-List, further enhances customer engagement and drives additional revenue streams, ensuring that it remains a destination for moviegoers. But we need to advertise that somewhere outside the theater. AMC has made significant progress in strengthening its balance sheet, a crucial aspect of the company's long-term recovery strategy. Long-term being the key word. The company successfully raised $250 million through an equity capital raise and eliminated $173.9 million in second lien debt, realizing an $85.3 million profit from this debt extinguishment. Moreover, AMC has extended the maturity dates of $1.86 billion in term loans and $580 million in second lien debt. It has shifted due dates from 2026 to 2029 and 2030, respectively. These strategic moves significantly enhance AMC's financial position by reducing near-term liquidity risks and bolstering the company's capacity to navigate its recovery. Then a couple days ago, Zach said, down 17.78% in 4 weeks. Here's why AMC looks ripe for a turnaround. All right, on Friday, AMC closed at $4.17, down 2 cents or 0.48%. So far, guys, all I see is everyone getting paid except the shareholders. Maybe we are due for a pop heading into the third quarter earnings call. It does look oversold, not investment advice or advisor. After all, Cinemark is up over 57% year to date, and they have more debt per screen than AMC does. Maybe one problem is we pay our CEO triple what they pay theirs, but I digress. You all know where I stand on AMC. It's dead money with this degenerate con man pervert at the helm without a black or white swan event. Having said that, I see 3 potential swans. Ryan Cohen could make a surprise announcement about the future of GME and his $4 billion war chest. AMC could chase GME up again. It could get out of Wall Street's control, and there could be a squeeze. As always, I'm sure Adam Aaron will not forget to dilute, and the Limit Up, Limit Down committee will not forget to halt the stock into a coma in full view of the regulators, who will do absolutely nothing unless Trump fires Gensler in January of 2025. Then that could change things. Number two, there could be a black swan event that affects the leverage chain of our enemies, who are currently leveraged 60 to 1 or much higher, forcing the prime brokers to protect themselves from the hedge funds. Think about the Archegos Credit Suisse fiasco. In the 2008 crisis, nearly 700 hedge funds closed, so don't tell me it's impossible. And then the third possibility is Adam could forget to remove the large electric vibrating egg he likes to stuff up his rectum while posting nudes of himself fornicating online. He could carelessly jump into the bathtub. His mistress could discover his bloated dead body in the tub, and then his sons could sell his remaining AMC stake on the open market. This is, of course, just a humorous fable, not to be taken literally. But if Adam were to resign, he would join the long list of disgusting human beings that finally reaped what they have sown. Upper left, there's Bernie Madoff with Ken Griffin, Adam Aron with Nicole Kidman. There's Harvey Weinstein with Nicole Kidman. There's Sam Bankman-Fried with Maxine Waters. There's Jeffrey Epstein with Leon Black of Apollo, and most recently Bill Wang and Andrew Left, and then P. Diddy, seen here ringing the bell at the New York Stock Exchange. Pictured there is then president of the exchange, Tom Farley, who said Diddy was an inspiration and on par with the founding fathers. You can't make this shit up. P. Diddy's links to Wall Street could even include a guy I admire, Ray Dalio, who said Diddy wanted him to be a mentor. Ray, don't bring a bottle of Dom to the party, just bring baby oil. Even Uncle Frank was spotted in the 90s partying in the VIP room with a certain red-headed actress, possibly connected to all these scandals. Uncle Frank was unavailable for comment at this time. From the El Paso Times, AMC to offer Jack Skellington popcorn bucket for Nightmare Before Christmas in theaters. Fans of Nightmare Before Christmas can expect the film to return to theaters for the spooky season. Along with the movie comes a limited edition Jack Skellington popcorn bucket that will light up your movie night. I ask you, who gives you guys better coverage of the popcorn bucket scene than me? Anyway, this year has been a wild ride for collectible popcorn buckets, from the Beetlejuice sandworm to Pennywise from It. The fun continues with upcoming buckets for Venom: The Last Dance and Gladiator 2. I told you guys, this is big business, $50 million a year and up. AMC Theaters unveiled a popcorn bucket shaped like Jack Skellington's head, which lights up. Wait a minute. Did you guys see a press release on that? Because I didn't, or even a tweet. How many more would we sell if our investor relations department wasn't protecting the interests of Wall Street on Adam's request? We know what you're doing and what you're not doing, John Merriweather, and I hope you spend whatever promotion or money you got for selling us out in absolute misery. While the price is still a mystery, you can grab this spooky collectible when The Nightmare Before Christmas returns to AMC Theaters on Friday, October 11th. So it's in theaters now. Breaking today, a historic box office weekend. Turns out 5 of the top 10 films are animated features. Hashtag Archer Aviation. Now for some good news. Check it out, guys. It's coming together down in Covington, Georgia. Here's a look at some of their latest progress from the construction of our high-volume manufacturing facility. On track for completion by the end of this year. The power in the main production building is on. The interior wall framing is complete. The aircraft hangar bay door installation is underway. And the glass storefront at the main entry is complete. There's Archer Aviation on Good Morning America, air taxis coming to a city near you, and don't forget the United States Air Force. You shorts better cover your ass. Upper right, you can see short interest dropping as of September 30th. Chart Exchange has it down to 13.48%, but Fintel.io has short interest at 23.34%, which is 51.84 million shares, bringing short interest ratio to 5.42 days to cover. Archer closed on Friday at 3.08, up 14 cents or 4.76%. How high can Ripple's XRP go if the SEC approves an XRP ETF? Ripple Labs has been at war with the United States SEC over XRP tokens for years. With all that, investment institutions have begun to slide the possibility of a spot XRP ETF. It looks like Ripple's XRP is next in line. Why and how? Bitwise registered an XRP investment instrument in Delaware at the beginning of October. Canary Capital followed that step several days later. Crypto liquidity rises as Ripple gears up to enter the stablecoin market. As Ripple tests the waters with its new stablecoin project, the broader crypto market is currently experiencing a sharp rise in liquidity, particularly driven by stablecoins. Notably, Ripple is on the verge of penetrating the stablecoin space with the introduction of Ripple USD or RLUSD in the coming weeks. Ripple President Monica Long confirmed the project will launch this year. And here we go, guys. This starts Tuesday. Ripple has officially announced their agenda for Swell 2024. Swell is their annual event and one of the most popular conferences in the crypto ecosystem. Previous Swell conferences have featured industry influencers like Ben Bernanke, former chair of the Fed Reserve, and Sir Tim Berners-Lee, inventor of the World Wide Web. These events have showcased Ripple's product developments and sparked discussions about the future of cross-border payments, the main use case of XRP. For 2024, the choice of Miami as the venue is fitting, as the city has rapidly grown into a global center for blockchain and crypto innovation. This year's agenda covers a range of topics from crypto regulation and stablecoins to AI's convergence with blockchain and crypto-centric banking. With networking sessions and in-depth panels, attendees will be treated to insightful discussion from industry leaders. The impressive lineup for Swell 2024 includes top executives and experts from across the financial and crypto sectors, 600-plus attendees, 50-plus speakers, and 40-plus countries represented. You'll see Monica Long, the president of Ripple, Sheila Bair, former chair of the FDIC, Brad Garlinghouse, of course, CEO of Ripple, and many more influential figures from Visa, Coinbase, Crypto.com, and other top firms. You see why it's important to get Gensler out of crypto and off of Ripple's ass. This stuff is actually happening now, guys. We need our project to be unfettered so it can have a seat at the table. New cross-border payment system pitched at BRICS meeting in Moscow. This is from today. Russia has proposed a new cross-border payment system to be conducted among BRICS countries to circumvent the Western financial system, according to the governor of the Central Bank of Iran. Well, in this case, you have to take the bad with the good. Ripple's Chris Larson donates $1 million in XRP to Kamala Harris. According to court filings with the Federal Election Commission, this is the first time a crypto donation has been publicly documented for Harris. Ripple and Larson have long pushed for pro-crypto candidates to take the stage, and this donation is reportedly a part of that mission. Yeah, years of Kamalanomics and Gensler will be just great for crypto. Pull your head out of your ass, Chris. Why give money to the very same people that have messed up this vital technology and, in my opinion, will be directly responsible if XRP never gets out of court, if the markets never have regulatory clarity, if the US dollar loses its reserve currency status, or if SWIFT beats us in the race to dominate cross-border payments. You are giving money to those very same people, which tells me you're one of them. This one goes out to Donahue George from last week. Meme stock investors lose short squeeze appeal against Apex. Retail investors can't proceed with claims against Apex Clearing Corp for shutting down share purchases for more than 3 hours during the January 2021 meme stock frenzy, the 11th Circuit ruled on Tuesday. New York law applies to the proposed class action and blocks the clearinghouse customers' claims, the appeals court said in an unsigned, unpublished opinion. The investors sued Apex over its role in the battle between investors like them, who held long positions, and short sellers to raise or lower 3 company stock prices in January of 2021. Because of jurisdictional concerns, the investors sued Apex in federal court. Citadel's Griffin says he has not supported Donald Trump for president. Quote, I have not supported Donald Trump. I'm so torn on this one, the hedge fund billionaire and Republican mega donor told journalists at an event in New York. Quote, I know who I'm going to vote for, but it's not with a smile on my face, Griffin said. Well, we all know what that means. He's voting for Trump because the other choice is stupid and illogical. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.